Welcome back to another Stock Market Open Live. Whoa, we've got a market that's just not too happy today. We should really go ahead and start with, look at what's happening to Tesla. My goodness gracious. So yesterday morning, we went from, let's go on the 5-minute chart so you can see it here. We went from a perfect rejection at my 183.34 line, nearly, within pennies, perfect rejection here, to dabbling around that 178 line, to breaking the 178 line. Now, as we broke the 178 line, we dropped way down over here, now bouncing barely holding on and bouncing off of the 170 line, coming within 54 cents of breaking 170.56 for Tesla. This is down multiple days now in a row. Go to the unaveraged candlesticks over here. You can see, it's probably actually a little easier to see with the average. You can see really since the pop of earnings here, we got earnings, got a nice rally in a consolidation pattern now. Usually after consolidation, multiple days in a row of red, barring a couple positive. Actually, I think we only had maybe one. Yeah, we only had one positive day here. We had a 1.97 up. Otherwise, we had a red for almost 5 days in a row of red there. Not great. This also coming as the Qs trying to push back above that 440 level, getting rejected. You've got Meta really trying also to recover after its earnings sell-off, and it's doing that, but it's also down about 50 basis points here in the morning. You've got Bitcoin recovering a little bit from the sell-off this morning, but look, that rejection right here continues. That May 6th trend line rejection, got it again yesterday, almost got fully to that rejection point, and now we're just sitting at support again, which is the 61.7 line. So a little bit of a downtrend going on in markets right now, not great. So overall, there are a lot of folks wondering, why could this be happening? What's going on? Well, every company has its own individual reasons. For example, when it comes to Tesla, you actually now have U.S. prosecutors examining whether or not Tesla committed fraud. Now, this is brought to you by Reuters, which a lot of folks over at, in the Tesla community are not the biggest fans of what's going on over at Reuters. Now, that could potentially be because Reuters was reporting things that just aren't as desirable to Tesla fans, or it could be the reality to at least some extent. U.S. prosecutors are now examining whether Tesla committed securities or wire fraud by misleading investors and consumers about the electric vehicle company's full self-driving technology. Apparently, the autopilot, full self-driving systems, which we know, operate with a severe degree of autonomy, are not fully autonomous, and so now folks are wondering, has Tesla basically misled investors? And apparently this let's see here. Reuters exclusively reported the U.S. criminal investigation into Tesla in October of 2022 and is now reporting the first criminal liability that federal prosecutors are examining. And that has to do with a wire fraud. So in other words, the DOJ has been looking into Tesla here for a while on potentially misleading folks about the full self-driving software suite. Now they're potentially looking into securities violations. Some of this feels a little like Get Tesla-esque. Personally, as a Tesla investor, as an FSD user, I don't actually really think that it's too misleading at all. I mean, the software was pretty clear to me when I signed up for it and got it. It was pretty obvious what the capabilities would be. I don't know how many people are actually misled by the title, but I guess that'll be up to prosecutors to allege and then for courts to decide. But kind of interesting. It's one of the reasons you're seeing Tesla drive down. You do also have Uber driving down this morning on greater than expected loss. actually unexpected loss. They were expected to make money, and they actually reported a substantial loss. Part of that had to do with write-offs for legal charges and investments into other companies. I kind of wanted to dive into that a little bit and see what kind of losses we're looking at over here. So I'm going to go ahead and pull up the Uber investor relations site, and we're going to go look at it. Uber investor relations. Okay, so all right, first quarter results. So here are the first quarter results on screen now. Demonstrate the ability to deliver consistent growth at scale, more than 7 million, and now looking to earn through Uber every single month. It's a lot of drivers. I mean, they have a lot of not employees, since obviously these folks are contractors, with the exception of certain jurisdictions where they are deemed employees. I thought this was very interesting. Tips during the quarter grew 21%, which is pretty remarkable. I mean, this is as gross bookings grew 20%. So you have a little bit of an increase there in the dollar volume of tips. You generally expect those to scale pretty similarly. It looks like they're pretty similar. But I do think it's neat that they're parsing out how much tips are growing versus, rides themselves and revenues. Maybe more people tipping now than previously. It'd be interesting to see the change over time on that. You look at tips over here. We're comparing 2024 here to 2023, 21% increase. So we had, where were the write-downs? So here we go. Operations, sales and marketing, R&D, G&A, platform. Where are the expenses? Oh, they don't want to talk about it here. Okay, very well. Well, anyway, they were expecting, here it is, net loss including non-controlling interest, net loss of 157 million. Their cash provided by operating activities, 606 million. So still good cash flow coming in. The problem is this right here, loss before income taxes, is really driven up not only by interest expense, but also, let's see here, where did they take their one time? Don't know. I see here. I want to find the breakdown. It might end up being in the 10Q, but I'm a little surprised because they seem to make a pretty big deal out of this when they were discussing their earnings call, and so I'm a little surprised it's not as clearly broken down here. I thought I'd be able to find that a little quicker, but oh well. So we'll get to the bottom of that on Uber. In fact, I can get a little bit more insight into it right now. The company doing pretty well otherwise, other than that surprise loss, and obviously the stock going down 9%, but you are actually seeing ridership up. So, for example, Q1 revenue beat, deliveries beat, mobility missed. You've got, that's on a revenue side, but adjusted EBITDA beat, that adds back in those one-time losses. Gross bookings were a slight miss on gross bookings, and the forecast also came in slightly soft. And I'm trying to find where that was. They had some one-time charge as well. Can't find it right now. But anyway, we'll get to the bottom of it. So then we have, let's see here. Oh, you're right. Trips, not tips. My bad. It's too early for me. Thank you for that. I swear that said tips there. It must just be too small for my eyes, and I'm not noticing the R there. I thought that was interesting. I'm like, we're now parsing out tips. No, we're not. Trips. You're right. Thank you for that. So, anyway. Okay. Well, let's see here. Where was the loss? But we do have that loss. Keep in mind, last year was the first full year that Uber had had positive income. Yes. Okay, I think I know what I'm doing wrong. I was looking at the left side. They flip this around and do 2023 versus 2024. They do this in such a weird manner. Here we go. See, here it is. other expense. See that? Look at that. $678 million other expense. That's really quite a pretty penny there of other expenses. And this came as a result of the other write-downs from investments that they made and write-downs that they took. Now, generally, those are non-cash expenses, which is good because the company still obviously has its cash flow. The company is able to really sort of write this off as a one-time loss and then move on. And that's why they have this thing called adjusted EBITDA. And in case you've ever wondered what the adjustments are, usually what they're doing is they're adding stock-based compensation back in because they see that as a non-cash expense. It does dilute shareholders, though. And then they remove one-timers. So one-timers would be things like remember here, I'll use another example. Amazon, for example, they invested in Rivian. They take losses on Rivian. And when they take those losses on Rivian, what they do is they'll write those down. They'll say, hey, we're down $500 million or $2 billion or whatever it is because of our investment into Rivian. And those will show up as one-time losses for the company. And they don't show up in adjusted EBITDA. So adjusted, again, sort of stripping out some of that. Okay, so let's see what else we got going on. We've got Intel also had a little bit to talk about this morning. Let's see. I think their guidance came in a little weak, if I have this right. So Intel revenue comes in below the midpoint expectation. That's interesting. This is for the fiscal year. Well, the estimate was $13 billion, and the midpoint is $13 billion, so it's a little weird there. But the headline here is that it's coming in below midpoint, but it looks like to me it came in right at the midpoint. But Intel also leading to a little bit of softness, 2.5% to the downside here on Intel. Let's see how that's moving some of these chip players. Nvidia down, back under 900 at that 895 level. Boy, we've actually traded the 895 level before. That's pretty entertaining. So that's Nvidia for you. Okay, with that, let's jump in for a moment just to see what the suits are saying over at the CNB Sizzles and see if they've got any kind of good juicy entertainment for us. I don't know if they're going to be able to top the full load of entertainment we got from Stormy Daniels yesterday, but let's see what they got for us.
Free thought, the interchange of, like the competition of ideas is fundamental to a free society. And however it comes about, I'll take it, quite frankly. I mean, I'm doing commencement exercises at Providence College in a couple of weeks.
Well, you're lucky there is one.
Yeah, no.
A commencement.
It's also a Catholic school that has a lot less of this activism going on. But you're finding more and more that people are going to be a lot more tolerant.
This has a lot to do here then with the protests. Let's briefly listen a little more. I'd like to get some more financial stuff here.
Points of view being aired on college campuses. That's what college is all about. It's not to be safe. It's to be intellectually unsafe. And that's the most thrilling thing of all.
We had Frank Bruni on the show last week. He had a book out called The Age of Grievance.
Yeah.
And this idea that the whole country and maybe world is in a state of grievance. There's more grievance.
Yeah, some people say that this more grievance idea is partly because of social media. In fact, I think it was it Mitt Romney, I think? I'm not 100% sure if it was Mitt. That's Mitt. But somebody suggested this is exactly why we need to ban TikTok because of the protests going on the campuses. I'm like, it seems like a little bit of a stretch to just blame TikTok, but okay. Guess anything's possible. Let's go on over here.
Post-pandemic, everything's kind of thrown off anyway. In terms of the data, the seasonal adjustment factors haven't been working well. You name it. So yeah, it is less reliable than it's been in the past, but it's what we have.
And how do you view this labor market really being able to handle all the immigration that has flown into the United States? Is there basically a lineup in terms of the workers coming in with the jobs the U.S. economy needs?
I'm sure there's some mismatch, but the truth is that a lot of the jobs that we need are lower level service sector jobs, healthcare in particular. We need people in nursing homes and daycare centers and, in these places. So a lot of these are lower wage jobs. A lot of immigrants come in and are willing to take lower wage jobs, even if they have more education and might qualify for something else. They do that because they need to work. And so I think, to tell you the truth, I don't think it's a huge mismatch. I don't think that this is a big problem for the economy. I think it's a big help to the economy to have people filling these jobs that are difficult to fill.
When John talks about the line of cooling versus serious deterioration, what are you looking at in terms of the Fed needs to see in the labor market in order to make that move of the first cut? Is it a 4.2% unemployment rate or is it higher?
Yeah, I think 4.2 would really start to get them seriously considering the timing of the first rate cut, because we have come up from 3.4 at the low, 3.5 at the low, long period over 2 years under 4%. We tick above 4.2. If the other data are also soft, corroborating that rise in the unemployment.
It's going to take like a quarter of soft data to start getting cuts. Pricing in about 1.69 cuts at the moment, by the way.
To cut so they can cut. Rest of the world's not waiting around. So we've heard from Sweden, they've cut. That follows the S&P. They've done the same thing. Citi's Andrew Hollenhorst says this morning. The Fed is unlikely to buck the global cutting cycle. Goes on to say that if either U.S. inflation or activity slows, the growing rate differential between the U.S. and other countries is yet another marginal factor that would encourage the Fed to follow the global trend towards lower rates. How does one inform the other?
Yeah, I mean, it's through the foreign exchange channel, right? We've had a very strong dollar. A lot of it has been driven by that widening rate differential. And so the dollar was starting to come down a little bit when we thought the Fed was going to cut, and we were building in 6 cuts. And then it took off again after the Fed sort of extended that timeline. And we see the pressure on the Japanese yen as a potentially destabilizing factor. We know Japan isn't too happy about it. So all these factors, I would say the dollar's on the margin for the Fed, but it's there, and widening rate differentials can create their own set of problems.
So you've gone through the framework for thinking about the economy, the global economy, and central bank decisions. Let's talk about the menu. A 2-year at 483, a 10-year at 448, a 30-year at 462. What do you want to buy?
So we've been talking about extending duration for quite some time throughout this whole kind of upturn in yields, and the reason is, beyond just sort of locking in yield for the future and getting those cash flows, and we do think the economy slows, inflation continues to fall, but also the upside downside risk reward is pretty attractive. When you have coupons at 4.5 to 5.5%, the amount that rates have to jump in order to actually have a negative return is very high. If you just sit there, you're going to earn the coupon. If they go down, you're going to have, that capital gain kick in. So when we look at that in terms of managing portfolios, the upside downside really favors being a little bit more duration.
This is a way of really pitching bonds. The downside of obviously buying bonds is that you can also have capital losses. So let's say you buy a bunch of bonds today because you're like, oh yeah, that's a great idea, and then rates end up going up to 5.5%, on the 10-year Treasury. Now all of a sudden you got capital losses instead of capital gains to talk about. So, things to keep in mind.
Bills and chill. Still, Kathy Jones of Charles Schwab. Kathy, good to see you. As always, great to catch up. Thanks, Kathy. Let's get you an update on stories elsewhere. Here is your Bloomberg Brief with Danny Berger. Hey, Danny.
Hey, John. Tesla shares are falling in the pre-market 3.7%. Reuters reporting that U.S. prosecutors are looking into whether Tesla committed securities or wire fraud by misleading the public about self-driving capabilities of its EVs. Tesla's autopilot systems assist drivers with steering, braking, and lane changes, but are not fully autonomous. The DOJ is examining statements by the company and Elon Musk that suggest its cars can drive themselves. Shares of Uber also down in the pre-market, 8.7%. The ride-sharing app missed on gross bookings and reported weaker than expected demand in LATAM. Uber CFO blamed tough comps, saying that last year captured higher demand tied to the return of Carnival.
Yeah, that's what we were talking about with Latin America, as well as obviously those write-downs. Okay, let's move on. Let's just see how things are moving on L-Sticks again. So, look at this. You've got the Qs down at 437. You're still up nicely from some of the lows that we had just a few days ago. I mean, really, you hit lows. I want to say the low close of about 417 there. That was about April 22nd that you had a low close. And since then, the market has been up nicely on the Qs overall, but starting to hit a little bit of a sandbag environment today. Got NVIDIA now breaking under that 895. Palantir is only up about 1/3%. This was up as much as 2/3, maybe even almost a full percentage point here in the pre-market. This is after the company fell into close yesterday, down 15.11%. Look at that rush into the close, which actually continued into the close for a moment before recovering. So some real pain over there at Palantir, all the way down at 21.47. A lot of folks looking at that as a potential buy the dip opportunity. What is up today, though, is Reddit. After hours yesterday, we got Reddit earnings that came in way higher than expected. Companies reporting like $2.94 of average revenue per user, which is pretty remarkable. Lyft had a pretty good guide as well. So you're seeing some good movement here, but not a lot of green. If I hide myself again here, you're still sitting at less than 1 page of green. We'll probably have more than a page of green soon, but we'll see what happens here. So if we flip over to the red side, we could see a whole lot more red right here. Even Trade Desk finally bouncing off of that $90. You can see that all the way at the bottom here. It's at $88. Supermicro's back at $800. Tesla almost down a full 4% after that DOJ investigation. Uber down 9.5% now, and worsening, unfortunately. Carvana down 268, Wayfair down 253. So definitely a broader base of pain, especially amongst some of these appear to be more interest rate sensitives. I mean, obviously you've got Tesla because of the DOJ, but you have NIO here. You've got Carvana, Wayfair. Some of these get a little bit more hit because of interest rates staying higher for longer. Let's look at the 10-year bond yield just to see what's going on with some of the latest moves in the bond market. You can see that on screen here, sitting about 4.48%, a good 20 basis points lower than where we were sitting, frankly, just a few weeks ago when we were closer to 4.7 than we were to 4.5. So good move here. Weekly mortgage refinance demand rose 5% after a slight dip in mortgage rates. It's surprising to me that there's actually refinancing happening right now, but okay. Oil falls again. Look at this, all the way down now to $82.19. Soon, we're about to be under $80. Sometimes falling oil prices are a leading recessionary indicator, as you're just getting less use. People driving less, flying less, basically industrial economies moving less. Who knows? Probably way too soon to tell from a oil point of view. All right, let's hop on over and see what CNBC Sizzle crew has to say before Jimbo gets on.
Here, first is that, and I'm just citing the story, the mail and wire fraud statutes cited by the about the DOJ, and the securities claims about the SEC. They have many of the same elements, Andrew. I think the people understand that the wire fraud statute is remarkably broad, and the securities law, I would say, is a subset of that activity. If you want to be pretty, what I would say is high level about this, and it involves an intent to defraud customers or an intent to defraud somebody in an investment decision, which has to be proven. And what I'll note here is there's a lot of atmospherics around this that we all know call into question when and if self-driving would actually be realized, including regulation, insurance, all sorts of factors that are beyond the control of a company. So this is not as complicated or not as simple as a simple statement and reliance thereon.
Yeah, but intent is very interesting because having covered Elon Musk for a very long time, he does have expectations, very high expectations, and I think genuinely does think that things may come quicker than they sometimes do on one end. And yet on the other, I imagine inside of Tesla, there's debate happening, email traffic with one engineer saying, it's going to take us a decade. We're never going to be able to do what we're telling folks to do. And others saying that maybe we can. And sort of, would that create a legal liability?
Andrew, you used the perfect word there, expectations. And expectations can differ, and we've seen through time, particularly in technology, where expectations have been way too rosy. And we've also seen circumstances where expectations have been way too pessimistic. I go back to the days of doing deals in the mobile phone area, where the projections about what we'd be able to use our mobile phone for, were grossly understated. And then you have things like, could we ever, and right in the Musk area, could we ever do what he's done with SpaceX? Could we ever have commercially viable astronaut launches? There was great pessimism that the U.S. could never do that. So, and then there are times when expectations, prove to be wrong. It's one of the amazing things about tech investing is that reality and expectations are often out of whack.
Jay, we appreciate you calling in, helping us think through some of this, and I'm sure we'll be talking a lot more about it with you very, very soon. Thanks.
Thanks, Andrew.
All right, coming up, the CEO of Lyft joins us on Quarterly Results. We'll be right back.
All right, so that's really interesting. I mean, this pursuing this intent to defraud investors on the stated capabilities of full self-driving. That's I don't know. It feels a little stretchy. I don't know how many people are going to go for that in a court, but like I said, I think it's always been pretty obvious the strength of FSD and that it was a beta basically, and moving into that direction. But just like planes use autopilot, there's still a pilot, or likely 2 to 3 pilots depending on the length of the flight and the size of the plane. But I guess we'll have to find out. So, interesting perspective there from Jay Clayton, who used to be over at the SEC. Now you got Gary Gensler. Everybody loves him, right? Crypto man. No. I know people are frustrated by him. I'm sure he realizes that too. Maybe people internally at the SEC are frustrated by him as well. There was a rumor there for a while that he was going to resign. I don't think anything ever came of that. But anyway, that doesn't do much to prevent Tesla from being down 3.7%. And you've got Wayfair 244, Snap down 443. You see why Snap is down. It does seem like a lot for Snapchat. Let's find out. So Snap, convertible offering of $650 million. Notes due in 2030. Snapchat offers $650 million of convertible notes due in 2030. Okay. Then what else have we? Let's see. So 5-year break even we briefly touched on. It's slipping a bit. Did post the second Meet Kevin report. So that second Meet Kevin report is out and is worth watching if you want sort of a catch-up on your day's worth of news from yesterday. Been trying, my goal, as well as a bit this morning, my goal is really to try to put together one video a day where we can cover some of the most salient topics and just give you a summary of everything that's going on in a pretty straightforward manner, keep it as neutral as possible. I realize sometimes neutral is not the most popular position to be in, but I still try to do my best to stay neutral, and then I can obviously address what each side is thinking. Just have to balance how much you're talking about each side. So that takes a little bit of effort. It's one of the tough parts about being neutral is like, well, how neutral are you being to the one side and then the other side? Oh well. So let's see BTC here for a moment. So I always love BTC as a leading indicator. Yesterday was a leading indicator of some form of sell-off coming, and we certainly did end up getting some form of a sell-off today, as well as towards the end of the day yesterday. markets weren't very happy. So you're sitting at about 62K now. If I go back on the hour chart, we're really rejected here at that 65.5 level. A perfect rejection on that trend, and bounced off the lower trend here. This is the channel we're in now, these purple lines, upper and lower. Not even really respecting the fib that we've got here as much, but we do have this potential shelf that we could land on at 61.7. So the goal would be that you hit for a bounce here, go for a bounce at 61.7, and then get a breakout. Because eventually these two will converge, and you do not want to get pushed down into a breakdown. Palantir now only up 26 basis points. Come on, buddy. I need a little bit of juice going into the morning. I thought we'd have more of a bounce, but then again, I didn't think that the Qs would be down 57 bips on overall what seemed like pretty decent earnings. Of course, it doesn't help that you get that DOJ pursuit of Tesla here, driving them down about 3.9%, and that slight potential miss on Intel guidance, though it seemed like a pretty bang-on expectation report to me. Oh well.
Our ride volume comes from partnerships. But I wouldn't just say that they're promotional. They really are meant to be deep partnerships. We're one of the very few companies that Delta allows to earn Sky Miles on their when you take a lift. You mentioned Chase Sapphire allows us to accumulate 10x points. I don't want to sound too huckstery here, right? But these are partnerships with really important companies that take customer obsession really seriously. And by partnering with them, we do great things together.
Do you have any concern about what you're seeing in the marketplace at all about the strength of the consumer?
John S. here says, Biden administration has been giving banks and hedge funds data before the release. It was reported by Reuters. Can you tell me where that is? I didn't see that. Let's actually dive into that because it doesn't sound right to me. Reuters, hedge funds, banks, data prior to release. Let's see here. Yeah, I can't get anything on that. Hedge funds, Palantir earnings, bank earnings. Yeah, I'd be really curious to see where you're getting that from, John. Let me know. Give us a little bit more insight into that. I'm not saying it doesn't happen, but I'd like to see that. If Reuters did report that, I'd like to see it, but I haven't seen that. So let me know. Is Shop down 19%? So let's see here. It's about Kyle here says it's about how the product was marketed. It's about how Elon sold the company as further along than it was. Yeah, I guess that's one way to look at it. I mean, that's obviously, if the DOJ does file a lawsuit, basically a complaint with actual charges, we could see exactly, what was said and what they have issue with. So, yeah, I mean, if Elon's like, oh, yeah, it's going to be ready by the end of the year, and that's being said every single year, and then it's not, yeah, there's probably some potential misleading nature there. But then you have to also prove as we saw Jay Clayton say, the intent to defraud. It's going to be a toughie. So where is this John person? I believe they stated they were part of a group that was able to get CPI before the release. I don't think so. I don't know where this is coming from, but if you're referring to CPI, I think what you might be referring to is the CPI super users. They don't get the data beforehand, but there is a super users group where basically you can get emails back and forth from people over at the BLS to help understand the data. That's right here. So this is probably what you're referring to. JP Morgan, BlackRock among BLS economists super users. And this is basically after the report comes out, you can get, and this was about a month ago. It was about a week ago, you're saying. I mean, show me where. But anyway, this is basically where you can basically, if you have a lot of questions for the BLS after the reports come out, they basically just email you and help you understand some of the adjustments or whatever, which, I mean, everybody is welcome to email the BLS, but like how many of us actually do, right? Like we don't. So we can, we could probably be part of their super users list too. I mean, I've called some of these folks before just because I think it's really insightful. and just ask them questions about some of the reports they do or the surveys. They're actually really helpful. You know, they try to help people. They actually just don't get a lot of people reaching out because, like, who really wants more detail on some of these reports, you know? But yeah, this is very different from saying that you know, they get the data beforehand. You know, that would be like pure rigging. And I'm not saying there's not some unfair advantage that could come from asking questions and then getting answers, but everybody has the right to ask questions. So, anyway, okay, good. So I know that there's some talk about Shop now. Let's take a look at what's going on with Shopify. You know, Etsy was probably a... did you see Hindenburg going after Carvana for accounting fraud? No, but that doesn't surprise me. I mean, they are... I am inclined to agree with Hindenburg on Carvana, though I'd love to see some of that. But we'll look at that after we look at what's going on with Shopify. So, let's see what we have. Shop. Shopify. All right. Okay, so yeah, Shopify just reported, and they reported Shopify plunges as OPEX sparks margin concern. Okay. Let's see exactly. I'd like to know a little bit more in detail of what's going on here. So let's write this down. Oh my lord. Come on, Windows. You can do it. Okay, here we go. Shopify. So, Q1 rev actually beats at 1.86 billion versus 1.84 billion. Their Q1 adjusted EPS comes in at 20 cents versus 17 cents. So that's all pretty good. Volumes beat. I mean, all of that beat, but it looks like Q2 is the issue. Q2 gross margin forecast decreases 50 basis points. That's the issue. Okay, really? Is it that bad? Weak Q2 outlook. Weak Q2 outlook eclipses a Q1 beat. That's the sort of the headline here. Some of this just seems like nonsense. Let me go into it exactly. Shopify Investor Relations. Let's look at their press release ourselves. All right. So, Shopify announces first quarter 2024 financial results. Okay, you are seeing the strongest version of Shopify in our history. Our outstanding Q1 performance is clear proof of our dedication to the new shape of Shopify, whatever. This is all marketing. All right, so where is the forecast? Here. Okay, so year-over-year comparability of our financial outlook will be impacted by the sale of our logistics business, which we expect will create a revenue growth headwind of about 3 to 4%. Well, that makes sense. That's interesting. They're getting rid of their logistics business. Is that the fulfillment? The Shopify fulfillment network? Are they closing that down? Is that what they mean by logistics business, or do they mean the trucks business? Let's see here. Shopify rebrands fulfillment services under Flexport in partnership with my... Okay. No, I mean, they still seem to have their fulfillment network. Okay, so what's the scoop on the outlook? What's their beef, so to speak? 2024 outlook. Here we go. Okay. These are items that we already hit. Now delivered 3 consecutive quarters of double-digit free cash flow. No expectations for this trend to change. GAAP operating expense to be up low to mid-single digits. which translates into operating expenses of 45 to 46%. I guess we'll have to wait for the earnings call to kind of see a little bit more detail here. But margin hit. Okay, here we've got 2024 by 2023. Gross profit, $957 million. And this actually looks like a good report. Operating expenses, $871. You do have income from operations of $86 million. Some form of one-time over here probably. Other charge of $342 million. I think maybe going back to a loss from a positive to a negative. I think that probably hit them over here. But I don't see this as so horrible that the darn thing should be down 20%. But I think that must be it. Going from, anytime you go from loss from gain to loss, I think that's probably what's driving a hit. But maybe the earnings call will give us a little bit more color on that margin guide. So I'm going to write that down. Going from gain last year, Q1 to loss now, probably contributes to this pain. Though operating income was positive, other charges hit them. Other charges led to a net loss, or contributed. There we go. Okie dokie then. Wow, I don't know, that just seems like so disproportionate. It's 19% for that. I mean, how's the stock been performing? I mean, it's been trying to recover. Now it's back down to $62. It's basically going all the way down to over here. Wow. It's a hit. That's definitely a hit. Alright. Well, that's Shopify. Boeing plane crash lands after landing gear fails. You know, Boeing just can't keep it up, I guess, huh? This was just posted 3 hours ago. Let's take a look at this. And a Boeing 747 plane was forced to make an emergency landing after its landing gear failed. FedEx cargo plane landed on its nose in Istanbul. Yeah, you kind of just have to hold it up until you're going to stall out and you're just going to whack onto the floor. There it goes. Oof. And you don't want to catch fire here is the really scary part. As you know, all the fuel's in the wings. It actually came to a solidly fast stop. Where's the fire department? Yo, Istanbul. Holy smokes, where's the fire department? Should be here already. You know, usually they declare an emergency and they're like, hey, heads up, like we're going to be landing without our landing gear. There it is. Oh my gosh, that took for frickin' ever. Yeah, usually they're like right next to you. And what they'll do is they'll actually follow you down the runway so they can douse you with either foam or water quickly to prevent, you know, the sparks from damaging the or causing a fire or whatever. But look at this. It comes to a stop here. There. 35 seconds it's at a stop, right? You don't get the first fire truck for what, 15, 16 seconds later? I know that doesn't seem like a long time, but for like fire and explosions and risks, that's crazy long. Again, why often the fire trucks will actually follow the plane as it's landing. They can be there a little faster. But apparently the fire truck that was following, that one doesn't show up for like 35 seconds over here. Anyway, so it doesn't look like Boeing can really catch much of a break. Kind of wild. They continue to get Boeinged. As we say, when one door closes, another blows open. All right.
Yes. Can we get back to...
Janet Yellen told me that Brooklyn was tougher than Queens, just so you know.
Well, we were different generations. Okay. Can we get back to Shopify for a moment? Because
yeah,
we kind of moved past a 20% decline in the stock price pre-market. When we open 20 minutes from now, we'll see if it holds. But That's a $100 billion company going to be down 20%.
Can I
and
get
you were
my,
like,
can I get my Shopify file up? No, I'm not dismissing it. I just know that we're going to give a lot of the show to Shopify, so I was trying to kind of, parse out the show.
I don't know if we're going to give a lot of the show to
Okay,
it,
so
but I'd like
top
to
line
understand.
momentum was terrific. Bottom line profitability was great. This is all first quarter, but they mean nothing. Why? Because as we read this morning in No Doubt, a Reuters story, which is just, Reuters has got it in for everybody. No, it says Canadian e-commerce platforms, I'm actually reading, which means therefore I'm not dignified. Its slowest quarterly revenue growth in 2 years against the backdrop of an uncertain economy. Core clientele doing okay, but they expected second quarter revenue to grow at a high teens, and disappointing investors were looking for plus 26. Now, of course, they did sell a division. Harley's going to defend that, but David, this is a company that is a beat and raise machine.
Yeah.
And it beat, but it did not raise. So it's no longer the beat and raise machine. It's just a beat machine.
It's just a beat machine, but it's getting beaten today.
Yes.
Yes. Okay.
Yes.
How about Uber?
It's a beat and raise machine.
It is, and the EBITDA number was fine. And people are, this morning raising why were FX is part of this story here, but Meta had FX. Why wasn't this sort of already incorporated? And yet you're looking at a stock that may be down as much as 7.5%.
You want to be vicious? Lyft's numbers were very good. David Risher did a great job.
Also guiding Q2 gross bookings below.
True, but I thought.
Although Dara had some upbeat things to say about return to office.
Yes.
And the deal with Instacart, and even some travel trends.
Look, I saw that stock down 5, and I honestly, I was out the moment that it was down 5. I was at my desk, just proving that all I care about is the forecast in life. And I said, okay, this stock could be up or down 5, but they're going to isolate a couple of things. And tomorrow, someone's going to upgrade it, like they did Datadog today, David, just jump all around like you love me to do.
I do.
Tomorrow, someone will upgrade Uber and say, this is your buying opportunity of a lifetime. Not unlike Builder's First Source, which was down 19% yesterday. I'm just waiting for the upgrade.
Okay.
But instead, they give me floor and decor.
But, we are going through a lot of names that have responded negatively to earnings.
Yes,
and
we are.
It hasn't because of the reported quarter, but it is, as it often is, because of the guidance.
Because there's a slowdown, and no one seems to want to talk about the slowdown. I like to look at actual things that aren't subjective, but are objective. Nucor, steel company, best steel company in the world. Hot steel, hot rolled steel is made for autos, made for industrial. They had the first decline. That is often the beginning. You don't have one decline in price. It's the beginning of multiple declines in price. That is a great objective thing to look at.
All right, so you said it, and we can keep talking about it. A slowdown.
We are now in the brown shoot moment. I'm now calling it a compost of brown shoots. That we're going to see a lot of numbers that are going to make it so the Fed has to cut.
Is Jerome going to move a little faster?
Yes, absolutely. And he knows, and he watches the show, and he will. Okay?
Forward earnings keep ticking higher, Jim. We're closing in on 244 now for the year.
It's like this.
Really? You think we're rolling over on earnings growth?
Right now, on the things that really matter. Housing. Yesterday, if you were on the Builder's First Source, which provides almost all the materials for every single major housing, their forecast was not slightly down. It was bad. Okay? Their forecast was bad. They have inventory issues, I think, that are developing there. We are getting inventory issues at Kellogg.
Wait, Kellogg or Kellanova?
No, Snack did okay.
No.
Kellogg. And what I'm saying is that you're not hearing those words. You're hearing
Kellogg is a $2 billion market cap cereal company.
Will you let me talk? We're getting a term called normalization. That's code for, you know what, we over-earned and now things are coming down. Mm-hmm. Okay? And that's what Jay knows. He understands the code. Normalization is the code word for we are slowing down. By the way, you know who else used normalization?
Who?
Disney.
Excuse me, who?
Disney, yes.
Oh, they did, you're right.
They used normalization right after the next paragraph after they talked about travel. They used the term normalization.
It is true. Disney was talking about post-COVID normalization. And so this idea about maybe having had like a travel boom and then you're going back to, maybe it's not so much of a travel boom anymore because you've got a little bit of going back to 2019 levels of travel, which, is good, but it's nothing like the, we definitely are in a place of, constant growth and booming. That constant growth and booming is slowing down. Oh well. Yeah. All right. Let's see what else we have here. We've got so Bitcoin just tried getting under 62K there for a moment. We got Nvidia dropping about 1.15 there. Got the Qs 0.56. Tesla 3.5, sort of bobbing around after that DOJ report. How's Boeing doing after that? Boeing's down about 45 bips, so pretty nominal. All right, let's look at Carvana. Yeah, Carvana. Oh, here it is. Yeah, look at that volume spike as soon as there was talk about Hindenburg maybe looking into Carvana's accounting practices. Ah, that might be the short to set up, huh? Look at them. They get and they're doing pretty well over here. They ran pretty nicely after earnings there. So and it's a tough, very pro momentum stock, but boy, I don't know. Used car market is falling. We talked about that in this morning's Meet Kevin report if you haven't seen that yet. And see what happens. Okay, Palantir up 56 bips. Hoping to see a nice little bounce at the open. We'll see what happens. Shopify still down 19%. Really got to read that earnings call to see what's going on. But honestly, if you read the Etsy earnings call, let's just say they are not very happy on the consumer right now for how much extra money people have for spending on discretionaries. It's a no bueno right now. Anyway, we just got about $200 of a rally there on BTC. Look at that. Getting some nice candles there. As we did go, oh, look at that. Almost bounced at that 61.7 level. It's a lot faster than I thought. That just happened here within the last 10 minutes. We were talking about this for, about 30 minutes ago. We were talking about the 61.7 level for BTC. And we just came within $90 of 61.7, 41, which I think is an important line to really bounce off of. So looks like there's a chance we might be able to get some bounces there. We'll see. Okay, very well. So then we are looking at. Let's see here. Okay, here. By the way, thank you for those of you commenting on the Meet Kevin report as well. I know some of you were watching this first, but when you do, thanks for having watched yesterday's and today's. The goal, again, is to get you a good, solid summary of what's been going on in markets and political news and otherwise over the last 24 hours in those. And I try to get those out by the time we go live here for the sticks. Anyway, we're 11 minutes away from the bell. Let's listen in.
Numerous times about the enormous capex by Microsoft, by Alphabet, by Amazon, by Meta, Apple as well, although they don't break out how much is for AI. And this is part of that number. You go to places where, conceivably there's a good amount of land. And as we point out so often, you want access to cheap electricity, hopefully renewable if possible as well. That's a key part of building these data centers.
So I'm so glad you mentioned that.
And then, of course, what do they get filled up with, as we've discussed so many times? I mean, this will get filled up with Blackwell.
Right, it's Blackwell. Now, can I just say, in terms of the quarters that we don't talk about that I thought was the best last night, Win was very good, and I like Reddit. We'll talk about that. But Arista Networks, which is this company that really is the plumbing. This is. Oh, you have it, Jayshree?
Yeah, so no, I have. I pulled the call.
Right.
Arista Networks call because
she calls them Titans, and I love that. So I'm changing my whole.
And by the way,
I was using hyperscale. I'm calling them Titans.
We'll go into detail when we open on Arista Networks. No, that's all right. Listen, I think an important point here as well, just so people aren't confused. This is not U.S. money here. The CHIPS Act, where we've talked about Micron and we've talked about Intel building fabs. This is very different. This is a data center. This is Microsoft's money. obviously part of what could be as much as $50 billion in spend this year. And remember,
you
they were
have
asked in the call, could you get to $100 billion, and they didn't dismiss that as a possibility.
Well, remember, Jensen Huang told me.
Wow. Yeah. Okay. We'll see. Want to make the mention here on Affirm. Affirm did actually beat. They saw their Q4 rev guide, so their next quarter guide came in about 10 mil higher than expected at 595 on the midpoint versus the 585 expected. And they also beat Q3 revenue. So you are seeing, this. The consumer just keeps spending. At some point, it must stop. In fact, what's interesting is BNPL is now being called shadow or phantom debt. Now that's really interesting. So phantom debt would also include pay in 4. So this is I'm going to call it a new phrase referenced by Bloomberg for buy now, pay later, BNPL, and pay in 4, many of which don't show up as loans on consumer reports. So, in other words, measures of people's basically liquidity, or how much debt they have, might be a little misleading given these new services that make it so easy to divvy up how much we're paying in some of these other BNPL style programs. Keep in mind, there's also this app. I think it's called Flex or something like that, and it lets you basically BNPL your rent. So I'm going to write that down too. So consider that Flex lets you BNPL your rent. So it's everywhere. You could BNPL your groceries, your rent, whatever you want. The courses on building your wealth. You all know me. I'm not a big fan of monthly payments. It's one of the reasons why we don't do any kind of subscription model for the courses. You pay once and you get the lifetime access and value to the course member lives or the trade alerts or whatever it might be. That reminds me. Did we end up posting the P&L yesterday? I'm pretty sure I did. But what I try to do every day is just post the trading P&L. I did. $5,775 yesterday. $3,600 off Coinbase on a trade, and I only got $2,000 out of Tesla on a trade yesterday. But hey, I'll take an extra $5,700 on a trading day. That's not bad. So hopefully we can print some tendies today as well. But this is interesting. People need to, let's see here. What do they say here? 43% of those who owe money to BNPL services said they were behind on payments. Oh my Lord. That's crazy. Wait a sec. Who conducted that? Harris Poll found that 43% of those who owe money to BNPL were behind on payments. Yikes. Major concern is that economic experts are being lulled into complacency about where consumers are. I kind of agree with that. BNPL is a black box. Yeah. BNPL companies don't provide data on installment loans to the credit bureaus. BNPL providers say the credit bureaus can't handle the data. You can't handle the truth. Let's see. They've reached a certain scale that could impact the economy. Impacts of buy now, pay later. Spent more than I can afford, 54%. Worse off financially, 34%. Spending is out of control, 24%. Gone into significant debt, 27%. I don't think anybody here is actually polling that BNPL has actually helped them. That's crazy. 42% of those with a household income of more than 100K were behind. Of those households with over 100K in annual income, 42% were delinquent. per the survey. Problem is with the surveys too is like, are you getting the right sample size of people to survey? I don't know. Wow. Stretched thin. Wow, that's wild. All right. Hi, Damien. So this is a Doomberg article. BNPL is a symptom of the poopy economy. Yeah, that's probably true. Can you look at Chipotle? Let's see here. CMG. Yeah. Boy, it's just done so well, even since earnings. Just this one just keeps going. I think it's just the ability of them to keep expanding is wild. At some point, the growth has to stop, but they certainly do know how to sell a burrito, and they're good. I wonder how S-Bucks is doing as well right now. Like, are they actually going to turn it around in China? That's the big question. Yep. Down more. Don't catch the falling knife. Somebody here says, were all of your day trades green, Kevin? Yesterday they were. That's why I just post the P&L, right? So if I just post the P&L every day, you could see, you know, what's going on. And then it's not like, you know, I mean, the goal is really just like just transparency. Yeah, so we've sort of just realized the easiest way to do that is do the P&L, because that way, like, I mean, there could be times, and I've mentioned this in like our chat before, like sometimes I'll be like, oh, you know, just roughly lost $500 on a fat finger, like misentering a trade, or like sometimes, and this hasn't happened in a while, but it's happened before, like you accidentally buy a put instead of a call, or something like just so stupid, right? And then you're down like $500 because you just made an oopsie doopsie poopsies. All that stuff shows up on the P&L. So I just think that's the most transparent way to do it. Just every day, here it is. If I make money, yay. Obviously the goal is to make money, but I don't guarantee it. Could definitely lose money. Have lost money before, but we're definitely really up year to date. That's for sure. Like really up. So I've been enjoying that. So, all right. What else? Tesla. Oh, Reddit. Okay, this one was such a shocker to me. I mean, they really crushed it. I don't understand how they make so much money per user. It's like people paying for gold to give people the badges or whatever. I don't know. So you know, we talked about Robinhood and the SEC a little bit yesterday, but I don't know that it's going to make much of a difference in you know, the SEC investigating Robinhood. I mean, the SEC investigates a lot of things. It doesn't necessarily mean there's wrongdoing. I do know they don't like crypto though, so you know, comes with the territory. You know what that means, right? It is time for the market to open. Let's listen to the bell. Doo-doo-doo.
Let's get the opening bell here in the CNBC Real-Time Exchange with a big board. It's Floor & Decor celebrating the opening of its first warehouse in Brooklyn, first warehouse store. And it's gorgeous. It's a gorgeous store. And to the NASDAQ, it's AI software company Zapata celebrating its recent listing via SPAC. Jim, you talk about consumer risks. JP Morgan desk today says maybe we're in a, quote, virtuous circle where consumer demand means corporate margins are solid, which means layoffs are less likely, which...
Virtuous circle? All right, well, we'll see what happens with this virtuous circle here. We've got, let's see here. Okay, so... let's see here. Okay, so, you know, let's see. What are the Qs doing today? QQQs. Let's see if they actually move over here at all. So, green initial. Okay, let me write this really quick. Okay. Let me just write this. Okay, there we go. Sorry, I just wanted to make a quick little mention that I had this Palantir trade that I picked up a little bit of dollahallas on. Not much, but picked up a little bit. And let's see what we got here. So you've got the Qs. Nice little move here on the Qs. You've got NVIDIA. Ooh, NVIDIA's moving nicely. Okay, very nice. Oh, wait, nope, never mind. Boy, look at that volatility. So, wow. Okay, that's a little bizarre. So, NVIDIA tried to break out here, but it's not going anywhere. Then you've got BTC at under 62 again. That's a little bit of an omen. I don't love that. Oh, yep, see, look at that. There's a nice candlestick on Palantir. Honestly, not as much of a bounce as I would have wanted, but it took a little bit on this. And I don't know, like, I was really kind of hoping we would open up like 2-3% up or whatever. I don't think I made too much on that one, but I'll take it. So then you've got, let's see, Qs. The opening is always so interesting to see what direction we're actually going to go. NVIDIA wants to go up. It wants to go back over 900. There it is, 900. And 895 is usually a spot it likes to hang out. So the fact that you're pushing that 900 will be interesting. Let's see if we can hold it. How's Tesla doing at the open here? Also kind of dragging down. Let's go to the average candle. Be a little easier here. Yeah. So, sorry, this is Piton. Here's Tesla. There we go. Let's actually click on the right one. Okay, so you did have, look at that bounce. So I have my line drawn at 170.02. We went down to 170.15. Interesting. And then you've got, whoa, look at those red candles on Reddit. Why? Holy smokes. Yeah, this is, I don't know, it seems like a little bit of a negative day here. Whoa. Lots of red coming in. You've got a firm that's rotating. I mean, it's up about 5% after those earnings, but you are also seeing some drag down here. Are we? I mean, how green are we at all, if at all, right now? Yeah, we do have a page of green. A firm, lift, Reddit are up there, though Reddit's somewhat giving up on some of these numbers here. Tesla recovering. There you go. Little bit of that recovery on Tesla. Palantir is basically back to zero. My goodness gracious. Never mind on the bounce there. I mean, you had like a minute or two there of a bounce, but what a joke. Okay, the Qs trying. Now under 61.9. Not a great omen for El Marquette. NVIDIA. Oof, yeah, going right back to that 895 level. How's Carvana? Is that going to be a short today? That would be interesting. I think it's a risky play too short, but boy, it is so tempting to short this sucker. Not a big fan of it at all. So let's see here. What about... Okay, so if I get... Let's see what... The problem with Carvana is the options are really expensive. You know, even if you go out 9 days, it's just... There's not a lot of open interest. Let's see here. We got 3,900. Yeah, look at that. 70-cent spread on an at-the-money call? That's crazy. That's just crazy talk. Just absolutely wild. So that makes it a little challenging. Open interest on the puts. This is closer. It's like 50 cents apart. But still a good chunk of spread there. So 25 cents if you go a little bit up here on some of these puts. A little out of the money. But, yeah, okay. Interesting. Where is the trade today? You know, the Qs want to stay alive here. Ooh, Palantir just went red. And BTC goes 61.9. It's trying to recover. Okay, you're going to get a bounce here. Look at that. NVIDIA bounced. Wow. It's just the first 15 minutes are so wild. This is why usually I don't love doing things in the first 15 minutes. It's just so unpredictable. But after the first 15 minutes, then it can get fun. Look at that. The Qs are going to try to get up to 439. Makes it tough to short Carvana on a day when you have things moving up again. Starbucks is actually moving up again. That's crazy. NVIDIA really wants to push it. Buy the dip. Tesla, 3.5%. Normal day in the life of a Tesla shareholder. Is that all you got? Okay, don't say that. Knock on wood. Supermicro, trying to follow NVIDIA up a bit. How's Shop? Did Shop recover at all? Nope. Nope. Shopify down 20.6. Somebody's asking, what are my thoughts on Starbucks? You know, like they're price-wise where I want them to be. The problem is, how much do I really trust what they're doing in China? And I think they're getting smoked by competition in China. And it just makes it a less desirable investment than it used to be. They've really lost some of their mojo in China, and I don't like. I wish I could go to the stores conveniently and be like, oh yeah, they're turning around in China. I think that's the sort of on the ground research you need. Ooh, look at Tesla. It's about to be less than 3% down. Peloton dropped 7%. You know, Peloton really only ran in the last few days over buyout rumors, but buyout rumors are almost always traded down after the rumors. So, and we talked about that yesterday. Maybe I should have actually played a short on it, but oh well. Carvana. Yeah, see Carvana rising. Can't short that when the Qs are trying to recover like this. The Qs are really happy. BTC not so much. But yeah, Affirm's recovering. Sideways a little bit. Okay, what about Enf? Enphase, we're looking at okay, right there at that 113. Can we get a breakout on Enphase today? It would really take, like, if BTC were really starting to rally and the Qs were starting to rally, that could be interesting. 113 breakout on Enphase? That's interesting. I don't know if we're gonna get it. So yeah, see, look at that reject. Rejected. Sorry. Didn't work. Then Qs. Yeah. Kind of giving up. All right, let's watch this. as we also see what some of the other news is. Let's see here. Okie dokie. This is about London. Earnings surprises. Spur flows into value ETFs. Okay. Weaker yen. Blessing and curse for Japan. Yeah. Data dependency can still get the Fed in trouble. Yeah, because if you stay the course for too long, you could end up causing a little poopsie doopsies on the market. Really just the economy, so it's not great. Okay. End phase. Yep, look at that reject. It's almost a perfect line on a reject right there. Yeah, couldn't keep it up on Nvidia. Tesla couldn't keep it up. This is not a very poppy market. I will say it's tough to play calls right now because just the last 2 days have not been very poppy. If anything, I feel like the last 2 days have been kind of a bleed. Somebody says Apple calls? I don't know, man. I don't know. I mean, I went into the trading day with some Palantir calls, but I closed those like, as soon as I could, mostly because I was really looking for like a 3 to 4% bounce. Did not get that. So, now it's down like 1.3. It's a bummer. I still think it's a great company, but let's see where it goes. Yeah, my next line really isn't until 2033. I don't actually expect we're going to get down to that level today. But yeah, oof, that reject on ENF. Okay. Oh, look, we're touching that line again on BTC. Big deal. If we break under this, I think the market's going to be a little sad today. 61,741. Mark that down. You drop below 61,741 today, this market trades down. And usually BTC is the leading indicator by about 30 minutes or so. It depends. Every trading day is a little different, but Qs, it's not like the Qs are really keeping that rally up right now. I mean, who knows? We'll see what happens. But how's Microsoft doing? Let's take a peek. Microsoft's trying to recover. So is, I think, Nvidia. Yeah, some bobbing around. Hey, you're getting that here on BTC too. Nice little bounce there. Keep that bounce going. You don't want to break under that 61.7 and getting too close to that. Too close for comfort. Tesla stays in that 3 range. Bummer. AMD. All right. So let's see here. Okay. Coin showing upward momentum if BTC bounces. What's interesting is that coin's kind of been trading or range bound in this lower twos segment. It's at 210 right now, 209. And it's really been stuck in this trading range despite the fact that BTC's gone down multiple thousands of dollars. Okay. Disney? Let's see what's going on with Disney. I see your comments. This is up about 23, but you're down from like 225 or 125. Aren't you? How high did we get? Yep. Look at that. 123.74. 125 is one of our resistance lines. So a close rejection there. Oof, a lot of red though today. Just nasty. I mean, you still got Shopify that's down 18.6%, trying to recover a bit. Palantir's also trying to recover. You've got the Qs pushing. Okay, are we getting a recovery here or no? It's tough to say. It's another tough, frustrating day. Oh, Tesla just recovered. It's only at 288 now. That could go right back to the 174 number. Watch that. All right. What else? Let's see what else there is. Rents seem to be the last domino to fall in the global inflation battle. Yeah. Buffett shouldn't worry about driverless Teslas. Okay, this is just somebody's opinion that you shouldn't invest in Tesla, basically. Yeah. Oh, how's Rivian doing? That's a good idea. Rivian. Oof. Down 9%. Tough day. Although the queues keep rising. I don't know what's pushing the queues up. Is it Apple or Microsoft? Oh, Facebook. Where's Facebook? There it is. Yeah, Facebook's rising. Amazon's red. But only by 93 bips. Affirm's only up 2% now. Wow. I gave up a lot. They were just 6% just a few minutes ago. Okay. What else? Sunrun reporting tomorrow. Yeah, energy sector was not good when Tesla reported it. Heads up wasn't great, and same thing with Enphase. The numbers were not great. Now, what's surprising is the stock didn't really sell off anymore. It seems to be very stuck in this region here. Oh, look at the queues go. Oh, wow. BTC's trying to recover as well. Yeah, look at that. Could be a little bit of a recovery pushing here. I think actually less pain over at Nvidia and Tesla is helping the queues. Yeah, look at that run. Okay, that's pretty optimistic. First 17 minutes now of trade are over. Guten Tag aus Deutschland. Oh, that's awesome. Wie geht's? Wow. All right. Let's go ahead and get over to the course member live stream after I make another cup of coffee. Cuppa. Push L button here and watch sticks. It is interesting. Getting a little bit of some positivity here. Let's keep looking at these while this plays for
Even though I'm a licensed financial advisor, real estate broker, and becoming a stockbroker, this video is neither personalized financial advice nor real estate advice for you. It is not tax, legal, or otherwise personalized advice tailored to you. This video provides generalized perspective, information, and commentary. Any third-party content I show should not be deemed endorsed by me. This video is not and shall never be deemed reasonably sufficient information for the purpose of evaluating a security or investment decision. Any links or promoted products are either paid affiliations or products or services which we may benefit from. I personally operate and actively manage ETF and hold long positions in various securities, potentially including those mentioned in this video. However, I have no relationship to any issuers other than HouseHack, nor am I presently acting as a market maker.
Some consolidation on Google, but seems like you are otherwise getting some optimism, with the exception of at Affirm. That seems to be going back down into the toilet. But Enphase is going for breaking that 113 line again. It's going to give it another shot here. We'll see what happens. Then you're going to go, look at those queues. Queues keep running. BTC back over 62. That's good. Nvidia's green. Tesla's only down 2.5. I don't know. First 18 minutes played out and it didn't get so bad. So, you know, it was a little weird there for a moment, but doesn't seem that horrible. So we'll watch what happens. Appreciate y'all, and we'll see you on the next one. Make sure to go watch that Meet Kevin report. All right, folks. Thanks. Bye.